I guess I've seen a fair few West African financing deals, and for me, it felt really competitive terms.
Do you see this, or was it designed as a marketing tool? No one gets financed off the back of the scoping study, no one, right? But you've got a piece of paper that says, we will finance you when we've got a DFS. So is this a way of capturing the market's attention? Was that deliberate or accidental? And are you going to be able to deliver this DFS with the cash you've got in the bank today? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, do give us a thumbs up. That just helps us to understand which companies we should be spending our time, money and effort on. You can also leave a comment below to help us understand the questions that you think we should be asking, how you think we're doing, and of course, what you think of the company. You can also catch this as a podcast, read about it as an article or a transcript on cruxinvestor.com. And of course, for our Crux Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We caught up today with Bert Monro. He's the CEO of Cora Gold. They're another West African junior gold story. This one's slightly different. They've got a very aggressive plan to get into production early with what they've got. So how do they do that? One, term sheet for £21 million from their major shareholder, which is Lionhead Capital, from the Quirk family. Two, they've got to get from scoping study where they are today, some quite attractive results to be honest, but of a certain size, through to a completed DFS by the end of next year. Can they do it with the capital they've got? He answers that question. What are the terms on the term sheet and what do they really mean? He explains that. And is it just a marketing gimmick? He talks about that. Lots of other things discussed, especially around this business plan of theirs, rather aggressive business plan of theirs. Look in the description below at some of the topics discussed. You can click on the number beside the topic if it interests you. That's called a timestamp, and that'll jump you to that part of the video. Otherwise, enjoy everything that Bert has to say. Bert, how are you doing, sir?
Yeah, good, thanks, Matt. Good to see you. How are things?
Yeah, not bad, not bad. We haven't spoken since October. You've been a busy boy.
No, a bit of water under the bridge, I guess, since then, yeah.
Yeah, I think there has been. And where are you? You back in London yet?
Sadly not. I'm on my way back. I'm currently living the dream at my parents-in-law house. My wife went back to work, obviously, after our second child, so childcare solution was a must. But yeah, no, looking forward to getting home in the next week or so.
You know we're recording this, don't you? She could be watching. You never know.
Yeah, she's not that tech savvy, so I think I'll be all right.
Okay. Well, look, why don't we kick off and do like a 1-minute elevator pitch for people new to this story, and then we'll pick it up from there.
Sure. Cora Gold is an AIM-listed West African gold company. Our main project is called Sankoro. We've got a positive scoping study completed on it, delivered it in January this year, an 84% IRR at 1,400 gold, rising to over 100% at $1,500 gold. A suite of exploration permits across Mali and Senegal. Yeah, that's Cora in a nutshell.
Yeah, you have been busy. You've been trying to get this thing delivered in an accelerated way. So I'm interested in that, okay? Because one of your main shareholders was the Quirk family. And I notice you've got a bit of financing. We'll talk about that in a second. But let's start with the business plan. Okay, when you first came into this, I think last September, October, you kind of were moving over into Cora. What was the plan then? What did you guys set out to try to do, and have you had to change things in light of COVID?
Yeah, so Cora's business model is pretty straightforward. You know, we've got a main project, Sankoro, and our plan is to move that into a producing asset as quickly as we can. That's been supported by the $21 million term sheet we signed a couple of weeks ago now, which is based on the scoping study economics we did in January, which would finance the project based on those economics on completion of a DFS. So our strategy is to take Sankoro and grow the resource initially and deliver a feasibility study before the end of next year, which on the back of that term sheet would then be financed if we deliver the criteria around the study results. So that's a pretty straightforward strategy, really. Take advantage of the gold price and the fact we believe a great project, which should be very positive and make us a lot of money. In terms of COVID, the second part of your question, thankfully we've got a Malian-based team and management out there. So we've been, I want to say business as usual. I appreciate in this environment it's probably the wrong expression to use, but thankfully we've been able to drill through it. We've been able to operate obviously with all the right precautions and restrictions in place, but we have been able to
operate through this period, albeit with a few changes in place.
Okay, let's come back to that business plan. Okay, because most small companies, when I last spoke to you, about 6 million market cap, you're at 17 million today. There's not a big company, right? So you've got different options on the table when you're sitting down as a board and saying, right, we're after gold, we're in the right place, geography, we're surrounded by gold mining businesses. Why the need to go down this particular route? Why do you want to get an accelerated time frame to get into production? Which is, with what data were you basing that on? Why not just build out a big resource?
Yeah, I'll answer the first bit first, I suppose. I think, look, as a group, both with shareholders and as a management group, our view is you can drill projects to become the perfect project. It could take you 5 years, it could take you 10 years. The dilution, the amount of money you've got to raise to deliver that perfect project. What value per share are you offering to your shareholders now? They're the owners of your business. So our view is to deliver the best value and to create the most, most accretive for our shareholders right now is to move this project as quickly as we can, raising as little cash as we can into a position where we're constructing a mine. Ultimately, then you'll then get a producing asset, and then you'll have a huge amount more optionality. So the project has an exploration target on it, which is up to 2 million ounces of gold, limited to 100 meters of depth. Mm-hmm. Of that, we've drilled out little under 300,000 ounces of it in predominantly oxides. So our view is you take the oxides. So without getting too technical, oxides are, it's ore near surface. It's a free digging material that has, good metallurgical recovery rates. So our view is, you focus on the oxides, lower capex in terms of building your plant, lower opex in terms of mining it, and get yourself into positive cash flow as quickly as possible. I appreciate it's not what everyone does. It might not mean that you've got a 10-year mine life of 100,000 ounces a year on your feasibility study when you're going to build it, but that doesn't necessarily make your shareholders the most money.
But who was driving that? Was that I know because we've talked in the past about John Forster, very well regarded in the region, very experienced guy. You've also got in your backers, a family who've made money from mining. So, but who's driving this? Why is this a good model for now? Given it's, I assume what sort of grades are we talking about across the board?
Yeah, so the grades is about 1.6, 1.7 grams a ton in oxides. So, from surface. So, for oxides, very good grade. There's plenty of oxide operations running at sub 1 gram a ton. Look, I think our share register is pretty tight. We've got 5 shareholders who own about 70% of the business. You've got the Quirk family who are around 34%. You've got Michael Farmer, who's the founder of Red Kite Mine Finance, who's in at just under 15%. Hummingbird at 12%. And then there's another couple of shareholders at around 5% who we know well. So you've got a tight share register. The Quirks and the Farmers owning, basically 50% between them. They like to build projects and to have producing assets. So they have been taking up a fair amount of the previous financings, and ultimately that strategy, I guess, has been discussed with them, and that's what we're looking to execute.
Why is it a public company? Why is it not a just private company doing this?
Well, Cora was private for a long time, obviously before I was involved, and excuse me, the listing came about, I guess, post the amalgamation of some of the non-core Hummingbird assets back in 2016, 2017 with what was Cora, which was run by John Forster. Ultimately, at the time, the finance wasn't there for it. I guess you're in a different market. Cora was, I wasn't involved at the time, but they were trying to raise money, and they weren't able to do it privately as such. So they took an IPO as a route to raise finance and to obviously move the projects forward. So I suppose, like all these things, it's circumstance. But yeah, obviously we have an AIM listing. We've got plenty of shareholders who obviously aren't, our big 5 as well. So
dint of fortune and timing, I guess, the answer to that one.
Yeah.
Okay. Okay. So let's go back to the scoping study. So what was the process you went through there? Because, like I say, it's great numbers, by the way, great numbers, but it's small, and with that sort of size comes a bit of risk. What are the things that you were looking out for which made you nervous, and what were the things that got you over the line?
Yeah, so I think at the start of last year, Cora made this commitment to deliver a maiden resource and scoping study. So obviously at the time, you weren't exactly sure what the resource number was going to come out at.
obviously we've got this pretty large exploration target. We've only really tightened up the drilling on a relatively small area, and at that point, so it's a fully pit constrained JORC resource. So it has mining parameters, for example, 34-degree pit slopes, which given a number of the mines in the region are operating at closer to 40 degrees in oxides. I'd say it's got conservative parameters within it. So I'm just saying that to I guess position the 260,000 ounces we got in our inferred resource, which I guess was based on, as I said, not only relatively conservative, we hope, mining parameters and pit parameters, but also a limited drilling. So so out of that meant that the scoping study has a relatively short mine life. So we tried to size it on the basis that we know and we expect to significantly increase the mine life and time. So rather than making a 6 or 7 year mine life and having a smaller production rate, we've gone for 45 to 50,000 ounces a year production. So you've got a meaningful amount of production, which generates $1,500 gold, $24 million a year in free cash flow. I guess the big decision was heap leach or CIL as the processing route. The scoping study goes into details on both of them. Ultimately, the capex trade-off meant we led with heap leach as our lead option. Heap leach is cheaper to build, but ultimately you're sacrificing recovery. So heap leach recovery 70%, CIL recovery probably closer to 95%. So I think it's a process we could well need to go through again as we drill out the resource at the end of this year and the beginning of next year. And if you end up with a much larger resource number, you could find that CIL might win that trade-off. So I don't think we aren't definitely going to do heap leach, I wouldn't say, in terms of the feasibility study. I still think we need to go through that process. We announced some met results last week or the week before, and we said in that we're doing a much larger program at the moment with a lab in Perth in Australia. So I think out of that, we're looking at obviously both the heap leach, CIL, and gravity processing. So I think out of that, we'll be able to do much more analysis around defining our process route from there.
I'm glad you said that. The like I said, with the size comes constraints, and the fact that you're going to continually assess as you go along, I think it's smart. Let's talk about the money now, because I'm intrigued by this. Mm-hmm. I'm really intrigued by this. You've got a term sheet. So why don't you tell us about the term sheet first, and then I'll ask questions. Yeah,
sure. So we delivered the scoping study, and it had a capex of $20.6 million, a pre-production capex of $26 million. A group called Lionhead Capital, which is an investment firm out of Cape Town, which Paul Quirk, who's a non-exec director of Cora, is also a founding partner of Lionhead. They delivered it. Well, they brought a term sheet to us for $21 million, broken up with $10 million of debt at a 10% interest rate and a 1% royalty capped at 250,000 ounces, a $5 million convertible note on a 3-year term paying a 10% coupon, which would then convert at a 30% premium to their equity. And their equity is for $6 million to make up the total 21. And that's being priced at an 8% discount to market based on a VWAP at the time that the equity comes in. So obviously post the conclusion of your DFS. So for me, I guess you might ask me a few questions on it, but for me, I mean, the last 10 years I was at Hummingbird. We obviously financed Yanflila. We were looking at financing Liberia. So I guess I've seen a fair few West African financing deals. And for me, it felt really competitive terms. I was very pleased. Obviously, we did negotiate them around the edges, and it wasn't exactly what we first saw in front of us. But we're really pleased to close those terms. I think, as you'll know, normally when you raise equity, you're probably paying 5% commission to a broker as well as paying a discount at the market. So I think, I think we're pretty pleased with the terms. Exactly.
I definitely want to ask you questions, and I've seen a few highly structured deals around West Africa for sure in my time. But isn't this also? It's not just the finance. Well, actually, let's be clear. You get this once you deliver a DFS. So when are you delivering a DFS, and how much work have you got to do between now and then? Because you've just done a scoping study. That's where you're at. So fair bit to do.
Yeah. So the conditions of it, which is worth talking about, the conditions basically of us receiving the money is based on us delivering a DFS to JORC standards before the end of next year, and it's based on having a minimum of 6 years mine life and 40,000 ounces a year production, with an IRR of 60% minimum at a $1,400 gold price. So the comparable is our scoping study had 45,000 ounces a year and an 84% IRR at a $1,400 gold price. So what we need to do now is focus a little bit on resource growth and obviously add more ounces, and then obviously complete a feasibility study. In the background, what we're currently doing in terms of the test work we're doing on the metallurgy will bring the test work on it up to sort of a PFS level, which means that by the end of this year, end of Q1 next year, you will be hopefully growing resources, and you'll also be building up in terms of the process route, the project forward as well.
Got it. Okay. So do you see this, or was it designed, this financing, as a marketing tool? Because it will catch people's attention. No one gets financed off the back of a scoping study. No one, right? But you've got a piece of paper that says we will finance you. When we've got a DFS. So, is this a way of capturing the market's attention? Was that deliberate or accidental? And are you going to be able to deliver this DFS with the cash you've got in the bank today? So, I mean, there's big questions, but it's all around the same thread.
Well, I guess there's two sides to it. On the one side, I speak to the Crux regularly. They really like the project and they want to see the project come into production. So this essentially puts a line in the sand that says, we'll finance this project. We want to see this into production, and they don't want to see it slipping away from them. So this essentially buys them the right to finance it, assuming we deliver. So in that regard, in my mind, I'm seeing it as a way of them protecting their interest in the project, because they've now shown that they've bought the right to do it, which is obviously fantastic for us. So I mean, that for me, that's the main reason. On the flip side, as you said, I mean, it's early. Not many people get financing for projects at this stage, but hopefully that's a sign of the quality of the project and the market that hopefully we're coming into, that people want to finance projects which are of this caliber.
Well, I think it's a sign that you've got an enthusiastic existing shareholder who wants to tie up the options here. So can they opt out? Can you opt out? What do the actual terms look like?
Yeah, I think it's an important point, and actually I probably should have raised it when you brought it up, but on the debt specifically, we have a right to get better terms on the debt, and if we're able to get better terms on the debt, they have the ability to match it, but if they won't match it, we can take better terms. So actually it's actually even kind of better than what it says on the tin, because I can go out and see if anyone will beat their 10% and 1% NSR on the debt, and if they will, they have the right to match it. But if they don't want to match it, and they aren't, Lionhead aren't really a debt funder per se, but they're happy to make the return on it if they can. So if someone offers better terms, you might well find they'll say, look, we're happy with our equity exposure and the convertible, and you can take the better debt terms. So I have got that flexibility. In terms of them, obviously there are a fair amount of conditions around what you've got to hit. Obviously we've got to hit the production rate in the study, and obviously they have they are allowed, they have to do the due diligence, and we have to go through the process and the documentation to complete it. So, obviously there is ways that, if the project didn't meet up to it, I'm sure, there are ways it might not, it might get out of it, but ultimately, they own 34% of the business. They're doing it because they want to see the project getting built, not because they don't. So I'm pretty relaxed about that.
No, but I guess where I was coming at it from is like the fact that you've gone and got a term sheet at such an early stage for a small project like this is so unusual. It in effect becomes a very substantial marketing tool for you guys to get noticed in the marketplace, where, let's face it, companies of your size wouldn't normally get noticed, right? Because you're people are talking about, well, how do I raise the next $1, $2, $3 million? Not actually, I've got a piece of paper here for 21 million. So I was just looking at it from that perspective. Was it deliberately done like that to give them options and give you some credibility in the marketplace whilst you went about the process of seeking alternative finance?
Yeah, and I think, look, they put it to us, and we obviously accepted it after a bit of negotiation. So I didn't phone them up, beating down their door, begging them for the term sheet. They phoned me up and said, we obviously like the scoping study, we like the project. We'd be keen to put a term sheet to you, which would help you finance it. And I was obviously, very happy to very happy to receive it and negotiate it. So yeah, for me, that was really how it came about.
Okay. No, I just think it's a smart move. I think it's a smart move on their part, because it's more than the sum of the parts. Let's talk about between now and then. You've got to get a DFS done. How much cash have you got today?
About $4 million in the bank.
Right. How much is it going to take for you to get a DFS over the line?
Yeah, I think, and I guess, sorry, we got $4 million today, and we did a financing last year at 7p, a £2 million financing, and with that came a 1-for-1 warrant priced at 10p, which runs until the end of September of this year. So, I guess we're sat at about 8.5, 9p at the moment. So, obviously there's a chance those warrants could be in the money and people might exercise them. I mean, certainly for me, I'd probably be looking to exercise the ones I got from which I took up in the placing before they expire myself. So I obviously can't speak for other shareholders, but we're sitting on a good cash balance, I would say at the moment for the size and stage we're at. The budget we're working through at the moment, really the key determinant in the budget or what will vary it is the drilling. So until you know exactly how much drilling you need to do to get yourself to that minimum required number of ounces, I couldn't say for definite whether we would have an additional requirement between now and the end of the DFS. But look, we're certainly fully financed at the moment to work through this year and well into next year. And I think ultimately, whether there is an additional cash needed before the end of the DFS would probably largely depend on quite how many meters we need to do to make sure we get enough into reserves to hit those numbers for the feasibility study. As I said, there are those warrants out there which are pretty close to the money at the moment. And obviously, the COVID, which is out and about, who knows quite what impacts that may or may not have. I mean, as I said, thankfully we've been largely unaffected by it to date. But obviously you can't count your chickens too early.
No, you can't. What are you going to do in the next 18 months? What are the moments? What are these catalysts? People always talk about catalyst moments, which people are going to get excited and drive the share price, but they don't always do that. But what are the meaningful moments for you to drive that share price, to allow you, if you need to, raise capital more cheaply than perhaps you could today?
I think initially, I think as I mentioned before, my focus really is on growing that resource and then infill drilling it to increase the categorization of it. So I think certainly by the end of Q1, we'll be looking to have obviously greater resources and also be increasing the categorization of them. I don't want to put my hat 100% on a specific date, but certainly, through Q4 and in Q1, we're certainly planning on a very large drill campaign with multiple rigs across San and Coro to really hit those ounces hard. Concurrently with that, as we said, we're doing now a load of test work at the moment out in Australia on the metallurgical side to obviously grow the processing route. So I think over the next 6 to 9 months, you're seeing the project evolve to get it ready to commence the DFS. So for me, we'd then be ideally starting that feasibility study from an engineering perspective in Q2 and sort of Q2, Q3, be hitting that feasibility study as hard as we can. I think it's pretty worth caveating it's an important part of the business and often overlooked by people. We commenced our ESIA, so our environmental and social impact assessment, which is an integral part of your feasibility study and also then getting it permitted and frankly your social license to operate about 2 months ago. So that is obviously ongoing. Guys are on the ground this week doing monitoring, for example, and doing case studies and questionnaires with local communities. So that will obviously be ongoing through the year, through the next 12 months as well. So look, I think there's going to be plenty of news flow, hopefully driving the share price. I guess we've been really fortunate with a good fair wind in the gold price as well, which probably always helps all gold companies. And I guess it's easy to forget, but we have got a suite of other permits in Mali and Senegal as well. So I still think we've got the ability to make a grassroots discovery. And I think you've seen in a number of companies in West Africa and across the globe really where discoveries can really make a difference to share prices and really drive your news flow if you go and make a big virgin discovery.
Okay, you mentioned where you are. You're in Mali. Mali's been in the headlines for about the last 6 to 9 months for all the wrong reasons. Bit of few incidents last year. Semafo were the recipient of some of that themselves, and we've spoken to a few Australian miners who, don't want to go mining. Have you been affected at all?
So for us, it is largely business as usual, as I said. I know you use that in the context of COVID, but I think that I can also use that in the context of security and politics as well. Our project is in the south of Mali. You drive south out of Bamako about 4.5, 5 hours, mainly on a tarmac road, which is nice when you're in the back of a pickup. But generally, all the troubles really have been north of Bamako. So I mean, Mali's an absolutely enormous country. It's enormous, and in southern Mali, all the operating mines generally are in southern or western Mali, and they've been running unaffected by by any of these terrorist incidences, and we're in amongst them as well. So we have been able to operate as normal.
Okay, well, that's good news, and long may that continue. You do have something which you can't avoid though coming up, wet season. How's that affect your business?
Well, it gets a little muddier. I mean, the way we're set up, we generally try and work as hard as we can up to the wet season, and then over the worst kind of 6 weeks to 2 months of the wet season, we generally aren't doing significant drilling anyway. For us, I guess the cost of setting yourself up to work through the wet season probably is not justified given the fact that you can have it as a pause time. So, for example, our staff who work on a rotation, they run generally quite a long field season up to the wet season, then they accrue a lot of leave. So you end up giving them all a bulk load of leave kind of over the wet season that they've accrued over a much longer field season leading up to it. So rather than, I guess, investing huge amounts in, I guess, access roads and bridges at this stage, we elect to kind of manage our field programs so that we're generally have work going on in the assay labs, whether it's modeling, database work and other work building on the project, which doesn't involve sort of physically drilling the permits for kind of 6 weeks, 2 months.
Okay, and just back on Mali again. Obviously, there's a lot going on, big country and all of that, and Bamako's nearby. But how do you manage the mining component to this? You've got to deal with the Ministry of Mines. You've got to deal with regional and state government. You've got to do things the right way. I know you're doing your ESIA, and you talk. I guess it touched upon some of the ESG components there. But how's doing business in country for miners where you are?
Well, I'm really fortunate in the sense, obviously, I took over from John Forster, who, as you said at the outset, a very experienced West African hand. But I guess under John, a guy who people don't know about is a guy called Siaka Kamara. He's a Malian guy who's worked with John for 20 years, actually educated in Russia, lived in Russia for 10 years, married to a Russian lady, speaks 4 languages. So he lives in Bamako. He runs essentially the company in Bamako. So he's the one who really has the closest relationship with the minister and with the various ministries as needed. So we're very fortunate. He manages that aspect of the business, particularly now. I mean, when I was last in Bamako, I went and saw the minister and the deputy ministers. But obviously I haven't been able to go there for a few months, sadly. But obviously I do go and see them and keep in touch with them. But on a day-to-day, week-to-week basis, he's fortunately there and able to manage that relationship for us.
Okay, so like I say, you've got this accelerated time frame, right? And you don't want to be held up by any paperwork here. So what are the long poles in the tent for you between now and the end of next year in terms of permitting and licensing? What's missing at the moment?
Yeah, so basically you need to convert your exploration permit into a mining permit, which obviously then would give you a 25-year sort of security of tenure, lock in all of your fiscal codes and royalties and everything else. The last example of that to happen in Mali was a company called Mali Lithium, which obviously a lithium company, also got some gold assets. They used to be called Beryllium, but they permitted their project. And when I was chatting to their MD, I think he said he did it in about 10 weeks from start to finish. But the prerequisite is to have completed your feasibility study and to have done your ESIA. So you need to have your completed ESIA and feasibility study, and then it's a relatively the beauty of Mali is it's got a 30-year commercial mining industry. They have been through this process a lot. You aren't the first commercial gold mine trying to do it and get permitted. There's an established process and route to it. And frankly, it's in their interests to get these projects permitted and built. Creates huge amount of employment. Firstly, secondly, obviously creates significant tax revenue and royalty revenue for the country. They've obviously had some big successes. Yanfolila, obviously, Fekola, obviously a massive operation. But equally, they've got a number of mines which are coming towards the end of their life as well. So this might not be the biggest project ever built in Mali, but equally, it will be a profitable one, we hope and expect. And obviously, it will create employment and generate plenty of revenue. So I certainly would expect it to hopefully go smoothly, the process of permitting once we've done all the prerequisite in terms of studies.
Yeah, we actually caught up with Mali Lithium a few months ago. I think it was around Christmas. Might have been December. Yeah.
How long did they've done their permitting by then, right? So
Yeah,
got it in
that's right.
September, October.
That's right. Yeah, and it was, as he said it was relatively easy. They want to get the revenues. They want to get employment. So, as you say.
Yeah.
Hey, well, look, Bert, good run through. Nice to catch up with you. It's been a long time. You've got a lot done in a short time. You've got a lot more to do. So stay in touch.
Yep.
Pick up that phone as
Thanks a lot.
things happen. I kind of like the thought of accelerated timeframes. And if the economics are there, it makes a lot of sense. The scoping study is a good first indicator. And as I say, keep working on those numbers and make sure this thing can get done.
Brilliant. Thanks a lot for your time. Really great to be on. And look forward to speaking again soon.